Cost of sales and cost of goods sold can seem like the same thing, and while they're related, they are actually different things. So looking at it from the whole sort of chain from supplier to customer, when we buy stock from a supplier as a business, all expenses incurred in acquiring stock and getting it ready for sale, we're going to call that a cost of goods sold. That basically leaves any other expense required to get stock from the business to the customer is going to be called another expense. And it doesn't have to be literal. It doesn't mean any cost required to actually deliver it in a car to the customer. It just means any expense incurred in running the business on a daily basis. That's going to be another expense. Cost of goods sold, that's actually the costs or expenses in getting the stock and getting it ready for sale. So they're slightly different. So that means there's a difference between cost of sales and cost of goods sold. So cost of sales is simply the cost price of stock purchased from suppliers. So I might buy a pair of Nike shoes for $50 and sell them for $200. The $50 is the cost of sale or the cost price. Cost of goods sold is different. That is what we call all expenses incurred in purchasing stock from suppliers and getting it ready for sale. That includes a few things. First of all, it does include cost of sales. Obviously, the cost price of stock purchased is an expense required or incurred in purchasing stock from suppliers and getting it ready for sale. It does include other things though, such as cartage inwards. So what that means is delivery from the supplier to our business. Could be packaging costs. So we're not talking about us putting it in a bag at the register and giving that to a customer. That's not required to get stock ready for sale. What we're talking about is any packaging from the supplier to us. So that could be a pallet or cardboard box, that sort of thing. Buying expenses, so any buying expenses we incur in purchasing stock and getting it ready for sale, that'll be a cost of goods sold. And lastly, we could have customs duties. So that's a cost incurred in getting things imported from overseas. So if we're selling things that we've imported from China, for example, any customs duty, that's an expense incurred in purchasing stock from suppliers and getting it ready for sale. So that'll be a cost of goods sold. So cost of goods sold, let's solidify it as a definition. It's all expenses incurred in acquiring stock and getting it ready for sale and includes the cost of sales, the cartage inwards, the packaging costs, the buying expenses, and the customs duties. So looking at it as a contrast between two types of expenses, if we had cartage inwards, so that was when a supplier delivers stock to us and charges us an expense called cartage inwards, that's a cost of goods sold. However, a lot of businesses then deliver goods to their customers. So if you went to Rebel Sport and bought a treadmill, they might deliver it for you. That's called cartage outwards for Rebel Sport. That's going to incur an expense. Because that's required to get it from the business to the customer, that's not a cost of goods sold. Cost of goods sold are only involved to get it ready for sale. Once it's been sold, cartage outwards would be another expense. Looking at cost of goods sold, we said that would include cost of sales, cartage inwards, packaging, buying expenses, and customs. So that's anything that's required to get it from the supplier to the business. Any other expense, there's potentially unlimited expenses, but anything to get it from the business to the customer, no matter how abstractly, it doesn't really have to be to do with literally giving it to the customer. It could be our rent, for example, cartage outwards, carry bags, advertising, vehicle expenses, potentially unlimited, the rent, any internet expenses, and so on. Gross profit then, we looked at that in the format of the income statement. That's simply the profit from selling stock. So in this case, let's say we bought goods that cost $54,000. That was our total cost of goods sold. Well, we're going to try and hopefully send them to customers at more than $54,000. So let's say in this case we sold them for $90,000. So stock that cost us $54,000 was sold for $90,000. That gives us what's called a gross profit of $36,000, and that's just our profit from selling stock. It's not our final profit though, because we still have a lot of expenses that are other expenses, things that are incurred in running the business, such as the rent and the wages and so on. Gross profit must be adequate to cover the firm's other expenses. Let's just compare two businesses. They both have sales of $90,000, cost of goods sold of $47,000, and a gross profit of $43,000. So at this point, the businesses are basically identical. Let's go to other expenses. Firm A's other expenses are $28,000. That gives us a net profit of $15,000. But Firm B's other expenses of $58,000, which gives it a net loss of $15,000. So basically what we're saying is the gross profit must be big enough to cover the other expenses. So you can see here, business A does a good job of producing enough profit from its sales, 43,000, to cover its other expenses, such as the rent, the wages, the insurance, and so on. But business B doesn't. Two things either need to happen. They either need to make more profit from selling stock to cover the $58,000 of insurance, wages, rent, and so on, marketing, or they need to lower their other expenses, because at the moment the profit from selling stock simply isn't big enough.